Pablo, good to see you. How you doing? How you been? You're the first one in today. Scott, good to see you. How you doing? How you been? Pure, good to see you. How you doing? How you been? Hey, Mouse T, good to see you. How you doing? How you been? Hello to my CMF family members. Let's go, Scott. Okay. By the time everyone tunes in, one by one, let's go through the intro, disclaimer, and what we're going to be going through on tonight's live. Quite a bit of interesting news to go through on tonight's live, especially when we get towards the end of the live. A lot of interesting news to go through, even throughout the essentially live show as well. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards, for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. We also do Q&As in this live as well, which means if you do have any questions or even statements to make, put it down inside the comment section. More than happy to help you out. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So welcome to the CMF Live. If you are new, and if you're regular, let's go CMF. By the way, thank you so much to everybody from the CMF who's tuning in right now, who has already essentially liked and retweeted this live on X. If you're watching this on X, so far we have 1 retweet and 5 likes on X. CMF members, if you're watching this right now on X and you haven't retweeted or liked this live, please give a like and retweet it. If you're watching this on YouTube, thank you so much to everybody who has already essentially liked the live. And if you haven't on YouTube either, go and like the live if you're watching this on YouTube. So on tonight's live, we're going to talk about a mixture of news, just like always. We're going to talk about the Fed report that essentially came out. We're also going to go through news relatable to essentially BlackRock on tonight's live as well. 2 different versions of BlackRock news we're going to go through on tonight's live. We're going to go through announcement news tonight, the Fed report, essentially the White House crypto report, and a lot of essentially other reports that have come out, and prospective news to go through on tonight's live, some partnership announcements, and so on. Just the usual, but with some here and there, some interesting news that everybody should know about regarding the crypto space, especially what BlackRock has been up to. Now, the first news we're going to cover on tonight's live, which is one of the most important news out there today, which is regarding Jerome Powell. As in, has he done rate cuts? The answer is no. So here it is. Jerome Powell said the Fed has made no decision on a September essentially rate cut whatsoever for now. The Federal Reserve Chairman Jerome Powell essentially said today that the central bank has not made any decisions about cutting interest rates in September in its meeting, shutting down essentially mounting speculation that a rate cut might be coming soon. We have made no decision about September, said essentially Jerome Powell to reporters during his press conference. We don't do that in advance. We'll be taking essentially that information into consideration, and all of the information we get, we make our own decisions. His comments were reported by Bloomberg. That's not what traders wanted to hear. Obviously not. Everybody wanted to hear the words rate cut come out of Jerome Powell's mouth. Unfortunately, we didn't get those. Investors looking for clues were essentially left empty-handed, and Wall Street essentially reacted fast. Stocks essentially gave up gains and turned lower essentially shorts away. Jerome Powell's statement didn't really help the situation regarding the crypto market space either. With just over a month until the next Fed meeting, Jerome Powell said the committee would be guided by 2 more rounds of inflation and job essentially data reports before deciding on any policy moves to be happening. We're also going to go through the job report today as well. While the Fed chose to essentially keep interest rates steady, 2 members of the board broke ranks and said no. That's the interesting part. That hasn't happened in over 30 years. 2 people went against Jerome Powell in the Fed meeting, and they said no, they didn't agree essentially with Jerome Powell. That hasn't happened in 30 years, essentially in the Fed. It was the first time in 259 straight meetings that more than 1 official designated from the group's decision. The 2 designators, Michelle Bowman and essentially Christopher Waller, were also appointed during Donald Trump's first term, just like essentially Jerome Powell was. Bowman essentially joined the board of governors in 2018 and was essentially reappointed in early 2020. She essentially had previously worked as a bank executive in Kansas and served as a state banking regulator before entering the Fed. Early this year, Trump nominated her to take over essentially the vice chair for supervision after essentially Michael Barr stepped down. Christopher Waller, came later in late 2020, just before Trump's presidency ended. He worked at essentially the St. Louis Fed since 2009. He also essentially, before that, had a long academic background. Both officials rejected the Fed's decision to hold rates steady today. That is quite a big, major announcement, you could pretty much say. Nobody since the past 30 years has went against the decision made in the Fed meetings. Today they have. Two people stood up basically to Jerome Powell and said, no, they don't agree with his verdict that we should be continuing forward with no rate cuts. These two people in the Fed want rate cuts. Never happened before, happened now. The designated highlights internal tensions in the Fed as it tries to steer policy while managing mixed signals from the economy. Jerome Powell defended the hold, saying the majority of the committee believes the current rate is not restraining growth too much. Do you know what this reminds me of? Gary Gensler, when essentially people started turning on Gary Gensler in the SEC, one of them being essentially Hester Pierce, who's known as the crypto mum. When Gary Gensler was the chairman as the SEC, Hester Pierce and also the acting chairman, essentially Michael, they both went against Gary Gensler and essentially disagreed with everything he did inside the SEC, going after the crypto space or going after Ripple or so on. This kind of reminds me of what happened in the SEC is now happening in the Fed, where one by one, there's a no verdict coming as to what essentially Jerome Powell sees best fit. People in his own cabinet are turning against him. Saying the majority of the committee, he said in his words, believes his rate is not restraining growth too much. It seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, he said. Jerome Powell also warned there is a downside risk to the labor market in the coming months. A change from earlier focus on inflation alone, he said, essentially, this risk will be an important part of the Fed's decision-making process. Moving forward, we'll receive a good amount of data that will help inform our assessment of the balance of risk-appropriate essentially settings of the Federal essentially Reserve's funds rate. He also addressed the impact of raising essentially tariffs on prices, saying that they've started to show up in good cost. Higher tariffs have begun also to show through more clearly for prices on some goods also, Jerome Powell said. But he did essentially add that their overall impact on economic activity and inflation is still unclear, according to him. According to him, also, the effect might be temporarily, but it's also possible that the inflation it causes could be more persistent. Looking at essentially a broader economy, Jerome Powell said there essentially has been a slowdown in growth during the first half of the year. The moderation essentially growth largely reflects a slowdown in consumer spending, he said. But he did point to swings essentially in the net exports as a reason to essentially overreact to recent figures. Focusing on the first half of the year, it helps smooth things through the volatility and the quarterly figures related to unusual swings in the next exports, he said. Despite these concerns, Jerome Powell said the Fed is in a good spot to respond quickly if conditions essentially change. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. So, for the first time ever, in 30 years, two people essentially disagreed with the Fed chairman's verdict on what should happen next. In this instance, being rate cuts. Never happened before, essentially in the past 30 years, where people start turning against the Fed chairman in the Fed meetings. Two people so far have rejected essentially Jerome Powell's verdict that, we should just be continuing forward with no rate cuts. It honestly, just takes me back to the Gary Gensler days inside the SEC, when members of the SEC were turning against Gary Gensler, and naming two of them essentially acting chairman that was in charge before essentially Atkins came through, and Hester Pierce also essentially turning against Gary Gensler and saying everything he was doing was wrong. Same thing's happening here. Honestly, it's brilliant to watch that the Fed is crumbling from within, the best way to put it. Works out even better for the crypto space. If the Fed just completely goes away, it'd be 10 times better. But if they don't go away, rate cuts is a cherry on top still. BlackRock is what we're going to talk about next, because the Fed has no future as we carry on into this digital future anyways. Because regarding the anti-CBDC Act, the whole point of the world going digital is every government has a CBDC and stablecoins and cryptocurrencies alongside it. With the Fed not being able to create CBDCs, it's pretty much end of the road for the Fed in a digital world. So going forward, there's going to be no use for the Fed in a digital world. So it's nice to see it actually crumbling from within. Now, that doesn't mean the dollar is going to go to zero in any sort of a way. Now, BlackRock. BlackRock essentially highlights stablecoins as a financial megaforce, is what we're going to talk about next. But before we talk about that, let's go inside the comment section first, and then we'll go straight to the next news. So let's see where we are at inside the comment section. As I previously, this is live, which means if you have any questions or even statements to make, put it down inside the comment section. More than happy to help you out. So let's see where we're at. We were here. Good evening, Miles and CMF. Manny, good to see you. How you doing? How you been? Funky Brother says, good evening, Professor Miles and the rest of the family. Good to see you, Funky. How you doing? Miles, I was really looking forward to the 30th, but it seems like another letdown. The 30th regarding the crypto report that came out. Well, it was more of a letdown for Bitcoin supporters because there was zero mention of a Bitcoin reserve for essentially Bitcoin maxis, which infuriated the Bitcoin maxis. The White House didn't mention the Bitcoin essentially reserves, which I think is a positive, and I'll explain why later on, which I've explained before in the past as well, to be fairly honest. Hello, Miles and CMF family members. How are you doing today? I hope that your day has went well. Scott, good to see you. How you doing, brother? How you been? Good evening, Miles and CMF. Orphan, let's go. How you doing? How you been? Miles, I cannot seem to retweet on YouTube. You can't retweet on YouTube, but you can like on YouTube. That's the only thing you can do. You can retweet on X if you want to retweet badly. Hi, Miles and CMF. Good to see you as well. George, how you doing? How you been? Share the live. Let's go, Scott. Good evening, Miles and all CMF. Hope everyone is well. Addy, good to see you. How you doing? How you been? Hello. Let's go, Scott. I don't know what that means. The last comment, I have no idea what that means. Okay. Happy Pisces. Good to see you. How you doing? How you been? Now, BlackRock is what we're talking about next. So staying on the topic of essentially stablecoins for now. BlackRock, essentially new reports, highlights stablecoins as a financial megaforce. BlackRock, led by CEO Larry Fink, announces today that stablecoins as a transformative megaforce in finance with the backing of the Genius Act, fundamentally altering payment systems worldwide. BlackRock comes out essentially with a report today praising stablecoins as essentially this digital future we're heading towards, that stablecoins will be playing a very, very vital role, and they will, 100%. BlackRock's stablecoin initiative, blustered essentially by regulatory clarity, is poised to increase liquidity, drive essentially institutional interest, and solidify the US dollar's global dominance through tokenized payments, which is facts. Stablecoins like the US dollar stablecoins actually strengthen the US dollars, not weaken it in any sort of a way. BlackRock, led by CEO Larry Fink, positions stablecoins as a megaforce in finance. The Genius Act enhances their role in payments, aided by BlackRock's involvements in managing essentially USDC reserves and digital financial products. Stablecoins essentially are central to BlackRock's strategy, emphasizing inclusion and efficiency. Efforts also essentially are boosted by federal regulations, as stated by Larry Fink. Tokenization of stablecoins break down barriers in traditional finance and offer inclusion and efficiency that the legacy systems cannot, is essentially what Larry Fink said. The industry sees essentially increased confidence due to BlackRock's entry, integrating stablecoins into both traditional and decentralized finance. Market impacts include rising stablecoin market cap and potential shifts in DeFi protocols also. Institutional interest could drive a surge in asset flows, notably for Ethereum and Bitcoin and other essentially assets out there. Regulatory clarity may accelerate stablecoins as payment tools, enhancing dollar dominance in cross-border transactions. Open source contributions and community discussions point to optimism around stablecoin integration in DeFi, especially driven by institutional interest. Market stability and product growth are essentially focal points for developers also. And historically, regulatory clarity has led to significant asset inflows in crypto. The Genius Act essentially approval that we recently had for stablecoins as payment methods mirrors such milestones, potentially fostering increased adoption by defining a very robust regulatory framework. So BlackRock's essentially report coming out is saying, essentially Stablecoins will be playing a very mega force in this digital world that we're heading to, and also BlackRock hinting that the past essentially isn't going to work out in the future. And what they mean by that is the digital essentially world that we're heading into, certain banks or institutions or payment systems won't be able to keep up in this digital future that we're heading towards. And we can all take a guess of essentially what they're referring to when essentially BlackRock said in traditional finance and offering conclusion efficiency that the legacy system cannot. I think very clearly BlackRock's referring to payment systems like SWIFT that just won't be able to cope with the future that essentially we're heading towards, let's just say, for example. Now, Brazil, US tariffs is what we're going to talk about next. But before we talk about Brazil, US, and tariffs, let's go inside the comment section first, and then we'll go straight into the next news regarding Brazil, US, and tariffs. Let's see where we're at inside the comment section. Good evening, Miles and CMF. Cali, good to see you. How you doing? How you been? Good evening, Miles and CMF. Mike, good to see you. How you doing? How you been, brother? Morning, Miles and CMF. Shelly, good to see you. Morning, how you doing? How you been? Jesus loves you. Repent and follow Jesus. Let's go, Freemaster. Good day, Miles and CMF. Christopher, good to see you. How you doing? How you been? Let's go. Now, US, Brazil, and tariffs. A staggering 50% leeway essentially unveiled, sparking global economic jitters. So again, we have tariff news on the main stage of the news, which is impacting the stock market once again, and also impacting slightly the crypto market. So here's the new tariff news. In the ever-shifting essential landscape of global economics, sudden policy changes can send ripple effects for a wide and often touching unexpected corners like cryptocurrency markets. Recently, a significant announcement has emerged from the White House, detailing a new executive order signed by essentially President Donald Trump. This order introduces a substantial 40% tariff on goods from Brazil, escalating the total tariffs rate to a staggering 50% as a part of their renowned tariff authorization. This development, as reported by essentially Jensen Finance, immediately raises questions about its potential impact on international trade, commodity prices, and indeed the volatility of the world of digital assets. The implications of the new US and Brazil tariffs extends far beyond the direct trade relationships between the two nations. In an essentially interconnected global economy, a significant trade dispute between major players can trigger a chain reaction, influencing global commodity markets, investment flows, and even geopolitical stability. Potential for essentially for retaliation, Brazil may respond with retaliation tariffs on US goods, escalating the trade conflicts even further. This tit-for-tat scenario can harm industries in both countries and reduce overall global trade volumes. Let's just make one thing clear. Any country that goes head to head with the US or Donald Trump on tariffs is just a losing battle, okay? Genuinely a losing battle. The EU previous speech was, we're going to essentially go head to head with essentially Trump, and we're not going to back down. It's never going to be happening whatsoever. And now look, we have an EU trade with the United States. So it seems like the EU did back down. They realized that they can't win against the US when it comes to markets. The UK had some weird essentially discussions as well. Before Trump became president, the British government, Labour Party, actually helped the essentially opponent that was versing Trump, Kamala Harris, to win. Believe it or not, the British government, before Trump became president, the British government that we currently have now was actually helping Kamala Harris to win, because they thought, we're going to go to trade battles with essentially, they were doing everything they can to stop Trump in his footsteps. And when Trump becomes president, they still tried to go head to head with tariffs. It didn't work. The UK gave up, and now we have a trade battle, essentially trade deal with the United Kingdom and the US. Every country that's went head to head with the US on a tariff battle has lost. So the longer any country essentially decides to go tit for tat with the US on tariff battles, they're going to lose. And the further they take it, the further damage they're going to cause, essentially, the more damage they're going to be causing in their own economies. Other countries might also take note, potentially leading to increased essentially measures worldwide. Impact on global supply chains. Many multinational corporations have complex supply chains that crisscrosses borders. Tariffs on Brazil could essentially force companies to reevaluate their sourcing and strategies, leading to higher operational costs and potentially less efficient production. This uncertainty can essentially deter foreign direct investments happening. Essentially, the commodity market's volatility, both the US and Brazil are significant players in global commodity markets, particularly in agriculture and rare essentially materials. Disruptions to their trades could introduce volatility affecting global prices for goods like soybeans, iron, crude oil, and so on, which essentially in turn impacts economics worldwide. Investor sentiments, geopolitical tensions, and trade wars tend to make investors nervous. This can lead to capital flight from emerging markets, increased demand for safe haven assets, and general slowdown in global investments, impacting growth prospects across various economies. A scenario like this is where essentially Bitcoin should be playing the key role of a safe haven. It should be playing the key role of a safe haven. Bitcoin has always been hailed as the safe haven token, as the equivalent to gold, as the risk-off asset. Well, show that you're a risk-off asset, Bitcoin, because now is time to shine. Brazil is getting 50% tariffs. Investors are shocked. They don't know what to do. And they're jumping into safe havens slowly. So why is Bitcoin's price not climbing? This is the time Bitcoin has to show itself. It's a real safe haven. It's an alternative to gold. It's a risk-off asset. So let's see if Bitcoin is going to shine when it should do. Effects often find their way into cryptocurrency markets. Digital assets, particularly Bitcoin, essentially, are increasingly viewed by some as a hedge against traditional market instability and inflation. Facts. There's been so many CEOs, CTOs, executive board members that have all came up. Michael Saylor. Forget about every other CEO or CTO or board member around the world in any company. Let's just take one example. Michael Saylor. He praises Bitcoin as a hedge against inflation, geopolitical tensions, tariffs. He says Bitcoin is a risk-off asset. Bitcoin is an alternative to gold. Bitcoin is a safe haven. Move. Bitcoin should be moving now upwards. The simplest way to put it, Bitcoin should be moving upwards now. The real question is it? And the answer is no. Honestly, I'm counting the days, waiting for regulations, more regulations. For example, the Clarity Act that needs to be signed by Trump, and before essentially another vote needs to happen and then signed by Trump. I'm counting the days for more regulations to come inside the crypto space, so certain crypto projects can decouple themselves from Bitcoin's footsteps and utility can start. Because the faster that happens, the less we'll be standing in line behind Bitcoin to see what its next footsteps are going to be. Simplest way to put it. But honestly, now is the time. You know, if Bitcoin is a real safe haven, act now. Bitcoin should be climbing. Brazil just got 50% tariffs. Bitcoin should be going up. It's a safe haven, no? It's a risk-off asset. It's a digital gold. It should be moving up. Now, the White House is what we'll talk about next, which is also relatable to Bitcoin because people were expecting from the Bitcoin maxi side for the White House to be mentioning Bitcoin reserves. That never happened, and the Bitcoin maxis were not happy, but actually infuriated on that matter. So here it is. The White House releases its first full crypto policy report. The White House released its first official federal report outlining how the US government will approach the crypto regulations going forward. The 22-page document came from President Working Group on Digital Asset Markets, formed earlier this year through Executive Order 14178, and marks the administration's first full crypto strategy since Donald Trump returned to office in January. According to the working group, the report is designed to fulfill Trump's campaign promise to make America the capital of the crypto world. Led by essentially senior officials across federal agencies, the working group outlined new legislative and regulatory proposals targeting every layer of the crypto industry, from banking and taxation to decentralized finance and stablecoins. The report defines how Congress, the SEC, the CFTC, the IRS, and multiple banking regulators should move fast to fill legal gaps, cut red tapes, and keep the US ahead in what the administration now calls the golden age of crypto. The working group opened with a call for essentially Congress to pass legislations giving the CFTC clear authority to regulate spot markets for cryptos that aren't considered securities. It pointed to the recent Baptism House vote on the Clarity Bill as a foundation and said lawmakers need to follow through. The report also said that embracing DeFi is critical and urged the government to recognize the potential of integration such technologies into into mainstream finance. This report that came out didn't move the market space. But what it did do instead is try to tell every government agency out there, the CFTC, the SEC, the OCC, the FDIC, the CFPB, and so on, to tell every single one of them to close all the gaps, bring in the regulations, and let's move forward inside the crypto space. No more jumping around in hoops and gray areas ever again. We're going forward towards the golden age of crypto. That is essentially what the White House crypto report stated, of essentially where everybody lies, what the CFTC has to pretty much do up to a certain extent, what the SEC has to do, the OCC, the CFPB, and so every governmental agency, in their own words, essentially closing off the red tapes, moving forward, no more essentially gray areas, no more jumping around, no more hoops, and so on. The SEC and CFTC were told to stop dragging out the process of approving trading at a federal level. Facts. So these are key things that came out the House, essentially, the White House regarding the crypto report today. Everybody was bummed regarding the White House crypto report today. I don't understand why. Everybody thought essentially the market was going to go up drastically. The market didn't react in a positive way as it should be doing. But the market essentially also was waiting for Bitcoin to be mentioned in the reserves. Who cares if Bitcoin was mentioned in the reserves or not? Because what we wanted inside this report, it's happened. Where essentially the report states the SEC and the CFTC were told to stop dragging out the process of approving trading at a federal level. To tell the SEC and CFTC to stop dragging out pretty much everything. One of them being essentially cases. One of them being essentially the ETFs. These are things we wanted to hear, where the White House is putting a foot down and saying you're dragging out situations inside the crypto space, stop it. They were advised to issue new guidance covering registration, custody, record keeping, and other regulatory gaps immediately to be closed. Sandbox to prevent delays that have slowed down innovation. We need clarity now, the report stated, and we need it across the board. Facts. The report also tackled banking access, something crypto companies have long struggled with. It said the administration had ended Operation Choke Point 2.0 once and for all, referring to informal efforts by agencies to push banks away from doing business with crypto firms. That door is completely closed now. The banks can no longer essentially push their agenda on any essentially governmental body and weaponize them to go after essentially fintech companies, which means that JP Morgan is going to struggle on weaponizing anybody to go against Ripple anymore. The working group said that this must be replaced by a stable framework where banks are free to offer services like custody, tokenization, and stablecoin issuance without vague rules blocking them also. It called for a full relaunch of crypto innovation initiatives and said federal agencies must clarify the process for banks to obtain charters and Federal Reserve master accounts. It also recommended that the capital essentially rules for banks should reflect the actual risk of blockchain-based assets instead of being based on fear of not knowing what cryptocurrencies are. The second half of the document focused on the US dollar's role in future payment systems. Today, Donald Trump signed, on July 18th, Donald Trump signed the Genius Act into law, creating the country's first federal stablecoin framework. The report now asks the Treasury and the regulators to stablecoins. It also backs new State Act, which would essentially permanently ban the Federal Reserve from launching a central bank digital currency following Trump's essentially earlier executive order. On financial crime, the working group pushed for updates to anti-money laundering AML laws. It said the Treasury and other agencies should clarify how banks' essentially Scarcity Act applies to crypto firms and what must be essentially reported. It also backed Congress recognizing the legality essentially of self-custody and defining AML CFT obligations of platforms operating in DeFi. We must protect privacy while targeting real threats, the report stated. Regulators should not misuse their authority to go after law-abiding citizens. Finally, the report called essentially on the IRS and the Treasury to clean up the country's outdated crypto tax policies. It asked for fresh guidance on CAMT, wrapping essentially on small crypto transactions that fall under the de minimis limits. It also essentially urged a full review of the earlier IRS essentially ruling on staking and mining activities. In its most sweeping recommendation, it asked Congress to create a new class of assets for crypto under federal tax law. That change would treat Bitcoin and similar assets like securities or commodities, essentially, but under modified rules. It also said crypto should be added to wash sale rules list to stop tax avoidance schemes from happening. Honestly, everything that was mentioned in the White House report is everything we wanted to hear, that the United States of America, that the Trump administration, that Trump himself is on the same page as us. Everything he said is everything we wanted to hear that's going to be implemented as we go along. Where essentially the White House is telling banks, stop pesterizing fintech companies, or telling banks to stop weaponizing essentially certain government bodies to go after essentially crypto companies, or telling the CFTC and SEC, stop dragging on cases or crypto-related situations, or essentially telling the CFTC and the SEC or any essentially government body out there to essentially cut the red tape and move forward. We've passed a regulation for his Genius Act for stablecoins, so let's start utilizing it. Honestly, everything that was mentioned in this White House report is everything we wanted to hear, and it's extremely, essentially, it just shows you that we're on the same page. That Trump administration, Trump himself, is on the same page as the crypto space. But the only thing people were bummed about regarding the essentially White House report was Bitcoin wasn't mentioned. Who cares that Bitcoin wasn't mentioned essentially as a reserve asset? Honestly, I couldn't care less if Bitcoin was mentioned as a reserve asset or not. All I care about is the CFTC and the SEC stop dragging on cases and the banks stop giving fintech companies a hard time. That's all I care about moving forward. Regarding banks not weaponizing government bodies to go after Ripple, or essentially CFTC and SEC dragging on ETF applications, dragging on crypto cases. That's all I care about, so that we can move forward in terms of regulations. And everybody should be happy about that. Honestly, the White House report was an amazing thing that came out today. It showed a clear path, a guidance path of what every government body should do. But the crypto market was waiting for Bitcoin in a reserve asset. Who cares that wasn't mentioned? Because what was mentioned was 10 times more vital than Bitcoin reserve asset. Honestly, it was 10 times more vital what was mentioned than Bitcoin reserve asset. Telling the CFTC and SEC to move faster and stop dragging cases on was vital. Telling banks to stop weaponizing themselves to go after fintech companies was vital. Telling government bodies to stop telling banks not to go with crypto companies was vital. Telling banks and government bodies that we've passed our first Genius Act for stablecoin regulation, start utilizing it, was vital. These were vital things that we needed. So just because Bitcoin wasn't mentioned as a reserve asset, everybody's throwing a hissy fit and going, oh, it was no big news. So I'm not saying you said that in any sort of way. Just want to clarify that as well. Also, Funky Brother, this is not towards you in any sort of way at all. But outside of the CMF, a lot of people inside the crypto space, were angry or essentially betrayed by the White House report because it didn't mention a Bitcoin reserve. I couldn't care less if it mentioned a Bitcoin reserve or not, because what it did mention was 10 times more vital than a Bitcoin reserve mention. Now, alt season. Is what we're going to talk about next. But a perspective essentially coming from Saigon Bank. So Saigon Bank has given essentially its perspectives on the market space before, of where they think essentially Bitcoin is going to reach, where Ethereum's price point is going to reach, even where XRP's price point is going to reach, or essentially where alt season is going to be happening. They've shared their perspectives essentially on institutions entering the crypto space and banks entering the crypto space and regulations and rate cuts. They've shared many perspectives. And their recent perspective from their bank is that the alt season is finally knocking at the door. Saigon Bank anticipates the rotation of capital is in progress. Signals are multiplying in the crypto ecosystem. After months of overwhelming Bitcoin dominance, altcoins are showing signs of awakening, according to their newest reports. Saigon, the Swiss digital bank, anticipates a major rotation of capital is about to be happening. Saigon, the Swiss bank specializing in digital assets, foresees a strict turning point in the crypto markets. So this Swiss bank has came out with their newest report today of where they think the market is heading towards. So this is their perspective from a Swiss bank. In its latest quarterly report, the institution highlights clear signs of a shift in favor of altcoins after a turbulent period marked by geopolitical tensions and instability. These uncertainties triggered earlier, essentially in the year, a wave of selling on altcoins happened earlier on in the year. Bitcoin's dominance, which had reached an unprecedented peak since 2021 amidst these macroeconomic pressures, is beginning to weaken. It has recently dropped by more than 6%, reflecting a gradual, essential redeployment of capital towards alternative crypto. As regulatory clarity extends to altcoins, keywords, as regulatory clarity extends to altcoins, the more regulations that we have, the better it is for the crypto space. More regulations means we're pretty much on the path to utility, which is the whole point of cryptocurrencies. And once utility happens, detachment happens from Bitcoin's footsteps for XRP, for XLM, for XDC, for HBAR, for Solana, for Cardano, and the list goes on. There'll be no longer following Bitcoin's footsteps because utility is now happening. So honestly, keywords coming from this Swiss bank, as regulatory clarity essentially extends to altcoins, capital could shift towards projects with concrete economic uses and sustainable token essentially models, analysis by Saigon Bank. This trend essentially is accompanied by increasingly clear regulatory environments. The US SEC essentially notably clarified a major point also regarding staking services. Following this improvement, DeFi is booming right now. DEXs essentially have captured 30% of the market spot volumes, driven by a wave of meme coins, essentially that boosted trading also to $530 billion. However, this dynamic does not seem to concern all altcoins. Some purely speculative assets are showing essentially market fidgeting and out of essentially sync with more structural trend mentioned by Saigon. Speculative altcoins are retreating while essentially other assets remain stable. And Bitcoin is remaining stable in its sense. Also, this shift towards altcoins is accompanied by continuous strengthening of two main cryptos, essentially. Bitcoin continues to its ascent, supported by liquidity dynamic considered extremely bullish on that sense. A persistent imbalance between supply and demand continues to push prices upwards. On July 14th, essentially, the queen of crypto even hinted at an all-time high of surpassing $123,000. Bitcoin spot ETFs perfectly illustrate this institutional appetite that's going on right now. These funds have now exceeded $160 billion in assets under management, absorbing alone more than 110,000 Bitcoins during the last quarter. A major extraction from circulating supply, which fuels buying pressure on the markets. Ethereum, for its part, is also experiencing a spectacular revival of institutional interest. ETH balances on exchanges are dropping, while essentially inflows of ETFs are intensifying. Nearly 30% of liquid supply is now locked via staking. The recent essentially Petra upgrade raised essentially staking limits and brought several technical improvements, thus consolidating the network's robustness. Institutional adoption is also accelerating among major Wall Street players. SharpLink plans to allocate essentially $1 billion in ETH, for example. Meanwhile, BNY Mellon, Society General, and essentially a stablecoin initiative supported by Donald Trump. Saigon also thus estimates that essentially Ethereum has definitely broken its long-term downtrend with its current movements also. According to essentially the Swiss bank, institutions essentially are coming more inside the crypto space, and they're shifting essentially from what they called the queen of crypto, which was essentially Bitcoin, which some also refer to Bitcoin as the king crypto as well. It's interesting how the Swiss bank called it the queen of crypto, Bitcoin. But Bitcoin essentially, certain investments are starting to shift over, essentially institutional investments, towards altcoins as we go further along into regulations, a perspective from a Swiss bank, which I agree with. The more we go towards regulations, the more detaching, decouplement, and so on will be happening. from Bitcoin's footsteps, and the more we go into utility. So I agree 100%. Now, SEC is what we're going to talk about next. But before we talk about the SEC, let's go inside the comment section first. Let's see what's going on inside the comment section first, and then we go straight into the next news, which is regarding the SEC. Good day, Miles of CMF. Christopher, good to see you. How you doing? How you been? Good evening, Miles of CMF. Denise, good to see you. How you doing? How you been? Scott, let's go. Good evening, CMF. We need clarity now. Facts. Let's go, Davey. Absolutely, we need clarity now. Good evening, Miles and family. Ian, good to see you. How you doing? How you been? Let's go, Scott. Share the live. Let's go, Scott. Share the love and the love. Let's go, Scott. Mike, good to see you, brother. How you doing? How you been? Share the live and the love. Let's go. I think that XDC and XLM are sleepers. XDC and XLM are great projects, and I agree they're sleeping right now. But once they wake up, there's no stopping them on the regulations, especially not overnight, but over time, 100%. In my opinion, no financial advice at all. Crossroads, purchased by essentially Ripple. Is this going to be a good buy in the future? Yes. Miles, can stablecoins be used for cross-border payments? If so, they will compete with XRP. Incorrect. So, regarding stablecoins, essentially XRP, there's two different situations that are going on. So, regarding stablecoins, let's say if two banks want to do a transaction in dollars, perfectly fine. You know, they could essentially use, let's say, two American banks, both holding essentially RLUSD, do a transaction back-to-back, perfectly fine. Now, let's say, for example, an American bank wants to do a transaction with a bank based out in essentially Hong Kong, for example. Let's say a Hong Kong bank wants to do a transaction with an American bank. The Hong Kong bank might not be holding, essentially, the Hong Kong bank might not be holding the same stablecoin, essentially, that the American bank will be holding. Let's say if the American bank is essentially holding RLUSD, the Hong Kong bank might be essentially holding USDT, for example, and therefore essentially the US doesn't recognize USDT, for example, doesn't recognize USDT, therefore it can't be accepted, and the Hong Kong bank doesn't essentially have RLUSD, for a sense. This is where essentially XRP plays that role, where it's just a middleman for all types of currencies. You don't need to be holding essentially, you know, certain amount of USDT or certain amount of RLUSD or certain amount of essentially USDC or certain amount of EURC or PYUSD. There's going to be so many different stable coins in the world. It's just going to become novelty items. There's so many tokens in the world. Now, if you just want to do a transfer between banks or businesses, all you need to do is just hold XRP. It becomes a gas token between these two transactions happening. So no, stablecoins will be playing a very different role to what XRP is going to be playing. XRP will play the main role, while essentially stablecoins will be playing a very minuscule role, you could say, as time goes by. I'll explain to you why as well. Even JP Morgan themselves said that they essentially, you know, downgrading USDC Circle on the stock market. The reasonings behind essentially JP Morgan downgraded that was because they said that they don't see stablecoins playing a very huge vital role. Instead, JP Morgan said that CBDCs will be playing the bigger role around the world in terms of transactions happening. And where do you think XRP is going to be playing in, essentially? The middleman. Ripple themselves also have mentioned that essentially XRP is just common sense at that point. Ripple also themselves have mentioned that XRP plays a very different role essentially to what stablecoins will be playing, RLUSD will be playing. They play very different roles because XRP can be used in all types of transactions, while as RLUSD can be only used for specific types of transactions. Now, so they won't be competing with each other in any sort of way. They play two different roles, two big, massive different roles. Miles, when can we expect XRP to hit $100, Johnny? Because the variable change for Miles, why taking long for XRP's high prices? Because Johnny, we still need regulations to pass a lot more. XRP, XDC, XLM, H4, ACH, all great tokens. Miles, any change in your opinion on HOT or SEI? HOT still good, SEI good. Hi Miles and family, good to see you as well. Alex, how you doing? How you been? Banks are making it tough for XRP getting into the banking license. Yes, we shared that. I shared that news essentially a few nights ago on this live, where essentially JP Morgan might have had a hand in play with essentially the whole Gary Gensler situation, weaponizing the SEC to go after Ripple because they knew Ripple was going to be a threat one day. You fast forward to Ripple applying for a banking charter license and a Fed account, And JP Morgan is not happy all of a sudden, talking about how fintech companies should not be given an easy route to banking, essentially licenses or Fed accounts or essentially so on, which it just shows you the level of essentially, that JP Morgan is just extremely threatened by every footstep Ripple takes. Invite your family and friends, Scott. I always feel like we are consistently waiting for something for XRP's price to go up, and once we get there, there's something else to wait for. John, it's because, as I said previously, what XRP, and first of all, we've made it so far. Honestly, we've made it so far compared to where we were day one with XRP, with the beginning of the lawsuits. I mean, you fast forward to now, and XRP has Ripple has a tremendous amount of licensings. They have a tremendous amount of partnerships. They have BNY Mellon essentially as a custodian. I mean, Ripple has achieved so much as we went forward, and we're at a stage now, pretty much on regulations. The first regulations passed in one of the biggest market spaces in the world. Hong Kong, straight after, essentially this Friday, is about to pass their stablecoin version of the Genius Act. South Korea is about to be passing their own version of a stablecoin act as well. It just shows what the United States market step could do for the rest of the world. So we've come so far from day one until now. So don't give up hope in any sort of way at all, because the game's just about to get started. We just had our first regulation passed. We're going to get the rest of the regulations passed, and we're going to move further on. And second of all, what I mentioned day one still stands. That what XRP is trying to achieve, what Ripple is trying to achieve, is very, very different to any other crypto project out there. Crypto projects that are out there, like, for example, Solana or essentially Cardano or essentially HBAR or any other crypto project out there, if they're creating games or essentially AI projects or Web3 projects or data storage projects and so on, if those projects go down for a couple of hours, it's not a big deal. XRP Ledger is trying to essentially transform an entire financial system of the world. It's trying to become some sort of a backbone to be able to compete with SWIFT, for example, or banking sectors out there also. And if XRP essentially has any sort of downtime, for example, then it'll be riots. People won't be able to pay for their mortgages, loans, banks, and so on. Imagine a world where everything will be running on the XRP Ledger when it comes to finance, for example. And let's say if XRP's network has issues, for example, and it goes out for like 11 hours, it could cause massive riots. People will think their money's gone forever. People will start, essentially people can't pay for their groceries, essentially the electricity bills, the gas bills, their loan pays. What I'm trying to say is that what XRP Ledger is trying to achieve is 10 times more different to what any other blockchain out there is trying to achieve. It's just, this is why I say XRP is on a different league, and it has to be 1 billion% sure before essentially taking over. It can't be like the whole Solana situation where it just cuts out for 4 hours. XRP cannot have any downtime whatsoever, not even a single second of downtime. It needs to be active 24/7. No disruptions and payments whatsoever. So that's why they don't have to be 100% sure. They have to be 1 billion% sure before they go forward. They're not creating a Web3 program or an AI tool or a gaming company or essentially any other, blockchain sector out there, CFI, DeFi, sci-fi, or whatever. They're trying to create a financial system which cannot have downtime, because they're supposed to be proving that this is a better solution. So in any sort of a way, don't even for a second, essentially think to yourself that, we're going backwards in any sort of way. We're actually moving forward. We've moved forward so much with all the licensings, with all the partnerships. Now going into regulations, the first regulation is passed. We're so close to a finishing line. It's pretty much unreal. Hi, Miles of CMF. Stormy, good to see you. How you doing? How you been? Thanks, Miles. Lena, good to see you. How you doing? How you been? Hello, Miles. My apologies. I'm late. No problem, Lena. Good to see you. Thanks, Miles. Irfan, let's go. How you doing? No problem. What's up, Miles and CMF? Ray, good to see you, brother. How you doing? How you been? Another risk for using stablecoins, they can freeze the asset. That's also true. Yes. USDT's froze a lot of accounts. End of days? Yeah, pretty much. Now, SEC. SEC has finally approved something today. Straight after the White House report came out, SEC decided to approve something. And this is what they approved. SEC approves in-kind creations for spot crypto ETFs. The SEC approved in-kind creations and redemptions for spot Bitcoin and Ethereum ETFs on July 29, 2025, marking a pivotal regulatory shift for crypto markets in the United States. The move aligns with essentially standards, reducing costs and impacting investor strategies, with significant ramifications for institutional participation in digital asset markets. The U.S. Securities Exchange Commission has approved in-kind creations and redemptions for spot Bitcoin and Ethereum ETFs. This marked essentially a structural shift, aligning crypto ETPs with established standards for commodities ETFs such as gold. So here essentially are the SEC press release notes. Among the central figures involved essentially is Paul S. Atkins, the newly appointed SEC chairman. This initiative essentially is a part of his efforts to develop a fit-for-purpose regulatory framework for crypto markets. The SEC's approval signifies a major regulatory step forward. The approval also essentially affects institutional participation and the broader crypto market. In-kind process provide cost advantages and operational efficiency, potentially resulting in a $710 billion impact due to institutional allocation and market essentially adaptation to these structural essentially changes. Financial implications include improved ETF efficiencies with reduced cost and tighter bid-ask spreads, leading to broader essentially market accessibility. The approval aligns with essentially for crypto ETP operations with traditional practices seen in gold and other commodities, promoting a cohesive market approach. Short-term market reactions are focused on adapting to these new processes. Institutional actors are also expected to see tangible benefits, showing shifts in funding structures as they adjust strategies around Bitcoin and Ethereum holdings. It's a new day at the SEC, and a key essential priority of my chairmanship is developing a fit-for-purpose regulatory framework for crypto asset markets. I am pleased essentially that the Commission approved these orders permitting in-kind creations and redemptions for a host of crypto asset ETPs. Investors will benefit from these approvals as they make these essential products less costly and more efficiently. Insights also suggest that the SEC actions may lead to deeper market integrations and accessibility. Future implications could include more significant adoption of staking processes if Ethereum ETFs proposals advance. Emerging essential trends indicate potential impacts on ETF liquidity and operating efficiencies. The SEC has pretty much given the green light to, you could say, ETPs to take even further on in that sense. It's easier essentially for a lot of altcoins to get an ETP than an ETF, to be fairly honest. But regarding the White House report coming out today and the SEC making one, moving forward with one footstep, it's good to see that the White House report is working, because on the day the White House report essentially came out is the exact same day the SEC decides to take one step forward in this SEC, essentially in this crypto world that we're heading towards, by giving a green light to ETPs straight away. Now, Coinbase is what we're going to talk about next, and JP Morgan also. But before we talk about Coinbase and JP Morgan, let's go inside the comment section first. Let's see where we're at. John, we have come a long way, especially this year, but then we stalled. But it seems like it could take years. Yes or no? No. Well, I said 3 years ago, I said the end date is 2027. On TikTok days when I used to do this live, I said the end date is 2027, but there's going to be no more bank branches essentially on the high streets. But it's not that. We get to 2027, everything takes off. It's just before 2027, everything needs to be set up. So you'll be seeing your movements in 2025 of regulations, institutions, and governments coming into play, and CBDCs coming into play in 2026. I said whatever country that doesn't release a CBDC in 2025 will be releasing a CBDC in 2026 and moving forward. And I said every year we should be seeing a market going up, 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 up. So it's not just essentially 2027 comes around and so on, and then we take off. It's by the time we get to 2027, we should have been taken off already, because we just got our first regulations passed this year. More governments inside the crypto space, more governments are following Trump's footsteps right now, first with the stablecoin bill. Second, also regarding the amount of institutions in play right now, banks in play, Ripple applying for a banking license, Circle applying for a banking license, crypto companies are going public right now, CBDCs are being released in certain countries this year as well. A lot of things still happening this year. And all that adds to the market going higher and higher and higher. Everything I said is still playing out. So, John, don't worry. Hey, Evening Miles, Jack, good to see you. How you been? Ripple is the world's engine. XRP is the oil. Let's go, Ian. It will pop once the 1,700 NDAs are disclosed. Flip the switch. Let's go, Christopher. Hollow Miles and CMF Peg. Good to see you. How you doing? How you been? Now, Coinbase. Coinbase essentially inks collaboration with major US banks to drive crypto adoption. In a major move that remains significant for crypto adoption, Coinbase and JP Morgan Chase have joined forces to make crypto access easier. In a recent tweet accompanied by essentially a blog post, Coinbase announced its partnership with JP Morgan Chase, the largest bank in the US, to accelerate crypto adoption. Coinbase will be partnering with JP Morgan Chase to provide 3 new options for its over 80 million customers to participate in cryptocurrencies. Beginning this fall, users will be able to make purchases on Coinbase using Chase credit cards. Do you know why JP Morgan Chase decides overnight to partner with Coinbase? Because they know when Ripple gets essentially a license as a bank charter, it will be offering similar services. When Ripple gets essentially a bank license and a Fed account, they'll be offering similar services to a massive client base, crypto services. JP Morgan feels left out again, so they decided overnight to partner with essentially Coinbase. Not only that, but they're letting essentially people buy cryptocurrencies using credit cards. Beginning this fall, users will be able to essentially make purchases on Coinbase using their Chase credit cards. Starting in 2026, users will be able to redeem Chase Ultimate Reward points for USDC. For the first time, points earned through a major credit card reward program will be transferable for cryptocurrency prizes. Chase users will be able to convert their Chase Ultimate Reward points to USDC through a base in Coinbase account. Also in 2026, users will be able to link their Chase accounts directly to Coinbase. Chase clients will also be able to connect their bank accounts to Coinbase to purchase cryptocurrencies, in addition to existing integrations. Once again, JP Morgan is trying to compete essentially further on into this digital world that we're heading, because they realize once Ripple gets essentially a banking license, Ripple will be offering a multitude of crypto services to a massive range of client base inside the United States or even worldwide. So overnight, JP Morgan decides to partner with Coinbase and offer essentially crypto services, crypto purchases with credit cards. It's an interesting essentially role they're taking. Now, in a sense, it reeks of desperation from JP Morgan when they let users use credit cards. First, they didn't let people use debit cards to buy cryptocurrencies. Now they're letting people use credit cards overnight. Now, the US essentially called PCI inflation data has just come out. And the update affects the crypto markets. So if you're wondering to yourself why the crypto markets was slightly down today, well, this had a factor to play into it. The US core PCE price index showed an annual change of 2.7%, essentially in May 2025. This figure is slightly higher than the previous expected 2.5 for quarter 2, with the quarterly rate dropping to 2.4%, suggesting potential shifts in economic policies. The US annual change in core PCI inflation reached 2.7 essentially in May 2025, exceeding expectations with implications for the cryptocurrency markets. The increase in the US core PCI inflation is essentially primarily due to its potential impacts on Federal Reserve's rate discussions influencing broader market risk sentiments. The US Bureau of Economic Analysis reported that the core PCI index annual change to 2.7% in May, higher than anticipated 2.5%. This increase affects macroeconomic forecasts and investor sentiments, particularly within the cryptocurrency sector. The US Treasury also highlighted the core PCIs as a critical economic indicator, with core PCI inflation running higher than expectations. On an annual basis, core inflation was 2.4% in the second quarter, much slower than the 3% rate in the previous quarter. The US Treasury Department official statement, US Department of Treasury, stated, "The crypto markets often reacts to changes in inflation rates. With the core essentially PCI 2.7%, it signals a shift in economic landscapes that may not immediately suggest rate hikes benefiting risk-on assets like cryptocurrencies. Investors in cryptocurrencies should monitor various impacts from shifting inflation metrics on essential crypto assets, pricing and volatility, while there is optimism from lower inflation, long-term essentially monetary policy shifts remain a speculative consideration for crypto investors. Regulatory updates from the Treasury imply the need for proactive adjustments within financial markets, with significant opportunities for the crypto sector." Crypto stakeholders and market analysts also will keep a close watch on the future essentially of BEA announcements to assess possible economic and market impacts. This outlook is backed by historical trends where lower than expected inflation boosted crypto market resilience. So PCI data comes out, and it's not what the crypto market was hoping for. It actually didn't help the crypto market any sort of way, but the market didn't react with essentially 10% drastic drops. It reacted with 0.50% or 1% essentially drops. So the impact wasn't too bad regarding PCI data that came out on essentially the cryptocurrency sector. Now, US senators introduce the Keep Call Centers in America Act of 2025. Trump essentially is sticking behind what he said, which was making America great again, bringing jobs inside the United States, and so on. Now, his recent essentially call is also related to AI inside the United States, where Trump is trying to, well, Trump's administration or US senators are trying to introduce something relatable to essentially on the version of AI should be involved inside the United States, but there also should be human contributions in that sense as well. So here it is. The new baptism bill introduced in the United States Senate today could nerf the use of artificial intelligence and offshoring in customer service roles to protect both American jobs and consumer privacy. So the senators have introduced a bill that for example, I'll give you one example on the type of sectors they're going after, call centers, where essentially companies outsource their call centers to other countries around the world. This specific rule essentially states that call centers inside for essentially US companies should be US company based. Call centers cannot be outsourced to any other country out there if you are a US company. And if you are going to be offering AI services, for example, everybody's had to talk to some sort of AI before. You know, when you call any company nowadays and the AI goes, state your name, your date of birth, and and so on, and ask you who do you want to speak to, and you have to say customer service, and the AI replies back, sorry, repeat again. You go customers. Everybody's had that difficulty with essentially AI on the phone, and it's just a nuisance and annoying. Well, according to this new law inside the United States, that every company inside the US, one, they can't outsource their call centers, and two, if they are going to use AI, they also have to give the option of a human if somebody wants to speak to them. If passed, it would essentially ensure that consumers are given the option to speak with a human representative located within the United States, while penalizing companies that outsource customer service jobs abroad. The only reason companies outsource essentially their call centers abroad is because they can, take advantage of cheap labor. But instead, now bringing back jobs inside the United States, companies have to pay a little bit more, as they should do. If passed, essentially, it will ensure that consumers are given essentially a chance, an option. In CBS essentially Money Watch interview, they said that people want to have the option of speaking to a human or an AI who hasn't pressed zero repeatedly, tried to skip the automated systems because they want to talk to a human. The senator essentially from Arizona asked. Under the proposed legislation, businesses that plan to offshore call centers operations will be required to notify the Department of Labor and at least 120 days before doing so. The DOL would then essentially keep a publicly accessible list of such employers whose names essentially would appear on the list for 5 years unless they take steps to bring those jobs back to the US. Companies on the list will become essentially eligible for new federal grants and federally backed loans, while businesses that keep their call center operations onshore would receive essentially treatments in the awarding of federal contracts. Any US company that keeps jobs inside the US will be rewarded with loans. Any US company that decides to outsource everything on cheap labor outside the country will be penalized. The bill would also instruct the DOL to monitor and track job losses attributed to artificial intelligence in call center industries and other industries alike. Moreover, call center agents will also have to disclose both of their physical locations and if essentially AI is being used at the start of customer service interactions. West Virginians essentially and all American deserves good service. When the folks pick up the phone and ask for help, they shouldn't have to deal with an AI robot or be routed to someone across the world. This bill puts American workers first, the senator said. And facts, it does. Honestly, America is, in my opinion, the only country right now that cares about putting its own citizens first. Not much can be said over here. This much essentially needed legislation protects U.S. call center jobs and addresses the growing threats poised essentially by artificial intelligence and offshoring work. Senators essentially also supported Mauer's statements about the security implications of AI-powered offshore customer services, adding that the workers outside America can misuse sensitive personal data. I'll give you an example. In the UK right now, they passed a certain law where if somebody wants to go to a certain website, they have to use essentially their passport or driving license. And they're starting off with that. And it's going to expand later on to other aspects of the internet, where you would need your passport or driving license eventually to even use Google in the United Kingdom as the law moves forward. Believe it or not, I'm not even joking. So first they started with certain sites, with certain websites for now, for essentially passports and driving licenses. As we move forward, it's going to go even further on. Why am I mentioning this? Because what they've mentioned inside the US bill, for example, regarding AI, is that if companies are going to be using any sort of digital services from fintech companies, it should be American fintech companies only, so that the data is not misused. With essentially the UK government has opted of using a digital service that isn't a British company, and it's a third company based on another country. So that means British users' data is going to be stored in another country, which could spell disaster however you look at it. Because they're only starting with certain websites, and it's going to it's just going to spread like cancer. And eventually, in the UK, if you want to go into Google, you would have to use your passport first to verify who you are before you could watch a YouTube video. That's what's going to happen in the UK eventually. First, they started with essentially monitoring your WhatsApp and Telegram, where WhatsApp and Telegram lost the case, and even Apple lost the case on encryption. So Apple removed encryption inside the UK. The UK essentially government can have access essentially to your private messages. They won that case already through WhatsApp, Telegram, and so on. And now they stepped it up by saying you need to use your passport and driver license for certain websites. They're going to go one level further even. They're just going to keep on climbing that ladder. Next thing you know, something I said 3 years ago, where if you want to know where your country is headed, just look at China with everything they have. That's where your country is headed. That's where every country is headed. If you want to know where your country is headed, look at China. It's an indication of how close we are to a digital world, how close we are to a CBDC world, how close we are to a digital prison, and how fast you should be reacting on essentially getting involved inside the crypto space and realizing the benefits of cryptocurrencies in a CBDC world, especially certain projects. We are concerned about what it means for American consumers if they're not talking to a human based inside the US when it comes to security around their private information, he concluded. Over the past year, AI tools have been taking up tasks once performed by human employees, including essentially a customer service, software development, and administration functions. Antithroix essentially CEO Daria warned in May that up to 20% of white-collar jobs could be lost to AI over the next 5 years. But even in the face of essentially job cuts, NVIDIA's CEO essentially Jensen told CNN that AI would only lead to job losses if the world runs out of ideas. I'll be very honest, the world has run out of ideas, we're just copying other ones. But that just shows you how close we are really to a digital world. Certain countries are moving much more faster into a CBDC world than other countries around them. Now, moving off that to South Korea. So, 2 nights ago, and even yesterday, I shared the news that essentially the US is going to go into lending, borrowing, and mortgages regarding cryptocurrencies. And then Senator Cynthia Luminous created the Mortgage Act bill of the 21st century. So the US took another footstep inside the crypto space regarding lending, borrowing, and mortgages. Why am I sharing you that? Because South Korea has just taken a footstep in that essentially path also. This is how fast essentially things move. Once America takes one footstep inside a digital world, other countries just follow in suit. South Korean regulators address crypto lending concerns. South Korea also did lending services and borrowing services, but not very well. But now they're going to get around to it to make it much more structural. South Korea's financial regulators, FSC and FSS, summoned Upbit and BitThumb executives, expressing concerns essentially over their newly launched cryptocurrency lending services with significant leverages. Today, the service's suspension highlights the regulatory tensions under investor protection as both exchanges face scrutiny, promoting the industries to collaborate on self-regulatory measures to ensure stability. Upbit and BitThumb recently introduced services permitting crypto-backed lending, allowing investors to engage in leverage trading. BitThumb offers up to 4x essential leverage trading and 10 cryptocurrencies, while Upbit restricts its offerings to 3 coins with 80% and other lending services. Following regulatory concerns about essentially insufficient user protection, both exchanges adjusted their offerings. BitThumb adjusted essentially its lending limits and paused new applications. The absence of adequate safeguards and legal essentially clarity promotes essentially the financial authorities to engage with exchanges, leading to collaborative efforts aimed at establishing essentially self-regulatory guidelines. The move highlights the essentially critical need for industry adaptability to legislative expectations. As of July 30th, 2025, no direct quotes from executives from Upbit or BitThumb, nor from essentially officials from the FSC or the FSS from South Korea are available. However, the actions taken and developments in the regulatory landscape indicate caution and increased scrutiny within South Korea's crypto markets. Regulators emphasize essentially on the formulating self-regulatory frameworks that could spur increased regulatory networks also on essentially these market spaces, and that essentially regulations are pretty much on the way for lending and borrowing services in South Korea when it comes to cryptocurrencies. South Korea brings a lot of money to the table as well. Now, the next news we're going to talk about tonight's live is an extremely interesting one. But before we talk about it, let's go inside the comment section first. And I can see inside the comment section that Ian has put a £20 donation. Ian, thank you so much for Ian, thank you so much for the £20 donation. Absolutely amazing. Going straight towards that CMF hedge fund. Incredible. We're nearly there, CMF. Facts. Let's go, Ian. Thank you so much for the £20 donation, Ian. Like, comment, and share live, please. Let's go, Peg. Market is stable, even now is good. Don't forget about 8 months ago, XRP traded at 5.50 cents something. Yes, facts. Let's go, Ian. Absolutely amazing. Let's go, Ian. Now, BlackRock. Something odd is going on. So, before there was ever such thing of a social credit system, companies had their own version of a social credit system. So before this thing came about of people having social credit systems, a CBDC wallet and so on, companies beforehand had something similar to social credit systems. Basically, an ESG, which is regarding their carbon footprint and essentially the what footsteps they take in the business world. So, well, here's the headline: BlackRock plans to seize your savings. Just to repeat that one more time: BlackRock plans to seize your crypto savings. So, and also in ESG is the reason why Budweiser went woke. And the company collapsed, pretty much. Nobody drinks Budweiser anymore because of what they did to themselves. If you're wondering in the past why certain companies decided to shoot themselves in the foot, it's because their ESG score was low, or it was going to go lower if they didn't listen. So companies will be told to do certain things. And if those companies don't agree to those certain things, then they'll get a lower ESG number, which means when the time comes to borrow money, they're not going to borrow to them. So it's the only reason why you saw certain companies go woke and then broke. Because of their own version of a social credit system, of their carbon footprint for companies. Larry Fink, CEO of BlackRock, recently published a revealing article in the Financial Times on his vision of globalization 2.0. So the CEO of BlackRock published something that he's essentially calling globalization 2.0. This new approach aims to direct citizens' savings towards investments in local infrastructure, under the leadership of asset managers like BlackRock. Larry Fink, the CEO of BlackRock, acknowledges that the first globalization generated multiple problems. The increase in wealth inequities ranks at the top of the list. However, his solution could worsen the situation rather than improve it. BlackRock's CEO criticizes the current economic, essentially nationalism, especially the Trump tariffs. He considers these measures as inadequate response to globalization problems. Thus, he advocates for a different approach, combining open markets, national benefits, and local worker protection. His definition of globalization reveals his intentions. So this is what Larry Fink said, the CEO of BlackRock. Under globalization, money often chased returns around the world without necessarily benefiting the people back home. Therefore, his solution is to direct citizens' savings towards local businesses and infrastructure. This approach would theoretically allow local populations to benefit directly. So, BlackRock, billion-dollar organization, says that your savings, your hard-earned savings, should re-enter back into your own local communities or any local communities in America to make the city a better place, is what they're saying. A billion-dollar company, asking essentially citizens of the United States to put their 10,000, 20,000, 100,000, 150,000, 200,000 savings into their own communities. If BlackRock cared so much about America, if they cared about the United States, if they cared about American citizens, why not do that yourself? Why not start investing into communities? Is it because it has no returns, or that the ROI just sucks? So there's no point for BlackRock investing in communities, or is just this, a con to get citizens to cough up their savings for a greedy corporation like BlackRock? BlackRock's strategy is based on several fundamental pillars. The first is to help more people become investors. If it's honestly such a brilliant investment strategy, why doesn't BlackRock do it themselves? Why don't they just start investing in small areas? Honestly, if it's such a brilliant investment strategy, massive ROI return on your investment, why doesn't BlackRock just do it themselves? They certainly can fund it. They can start very small with small community areas. If it's such a, brilliant idea on investment. BlackRock's strategy is based on several fundamental pillars. The first is to help more people become investors. Larry Fink cites Japan as an example where tax changes now encourage more investments for retirement. Also, Japan's economy is not doing too well. Just to hint out, just to point that one out. Larry Fink using essentially Japan as an example of this brilliant strategy. Japan's economy is in shambles right now. Automatic enrollment in pension funds is the central element of the mechanism. Maria, the architect of the European Savings Union, revealed that all European workers would essentially be default contributors to those funds. However, these pension funds are generally managed by asset managers like BlackRock. In Europe, Larry echoes the same opinion as the elites. Europeans save a lot but do not invest in Europe. He attributes this to the absence of a unified capital markets. Thus, he states, if I were a European policymaker, this union would be my top priority. Larry Fink mentioning, essentially, that people should be putting their own savings, giving it to BlackRock so BlackRock can invest their savings into Europe, for example. So European citizens, for example, in France, let's just say French citizens, German citizens, Austrian citizens, pension funds would go towards BlackRock in Europe, and then BlackRock in Europe would start investing that back out into their own essentially communities. One, if you really, really want people to start investing back into their own communities, People might start doing that if the governments cared for the current citizens. Because as far as everybody's aware, in Europe, the governments don't care about their own citizens. They care more about the people coming across the border than they care about their own citizens. So why should people invest their pension funds into a country or a government that doesn't care about them? First of all. Second of all, who the hell is going to trust BlackRock with their pension money? BlackRock estimates that the $68 trillion will be needed for infrastructure in the coming years. So BlackRock needs your money for infrastructure, your pension fund money for infrastructure. Neither companies nor governments have this financial capacity. Furthermore, more than $25 trillion in savings are stored in US banks, and about $13 trillion in the EU. The real goal is clear. Use these savings to finance the ESG agenda and the United Nations Sustainable Development Goals. Do you know what that means? So, just to repeat that one more time. The real goal is clear. Use people's savings to finance ESG agendas and the United Nations Sustainable Development Goals. So, the United Nations ESG agendas is basically a carbon footprint world, which means a social credit system world, which means BlackRock is saying, let's just use your own savings to create you a CBDC world. BlackRock wants to use people's pension money to create them a sustainable world according to the United Nations on the ESG, which basically means BlackRock wants to use your money to create you a CBDC world, essentially attached to a social credit system. They're not creating you a CBDC world, but they are creating you a social credit system world. I don't know what moron is going to go, yes, this is a brilliant idea coming from BlackRock, where BlackRock is suggesting that they'll just use your money, your pension money, to create you a social credit system world. Raj, CEO of Global Infrastructure Partners, that's acquired by BlackRock, revealed that the top priority of infrastructure investments is of the global economy. It's just the number one priority, top priority. BlackRock is essentially literally acquiring global infrastructure right now. Just to put in perspective as well, BlackRock is essentially literally acquiring right now global infrastructure. The company already owns a network of 43 ports in 23 countries. 1 in every 20 shipping container in the world passes through these ports every year. BlackRock is pretty much buying up land, buying up homes, buying up ports. BlackRock is coming for control. This essentially privatization of infrastructure represents a major geopolitical issue that BlackRock is getting too much power. It's becoming too powerful. The infrastructure projects essentially BlackRock wants to finance have a major downside. They are liquid assets. The invested capital will be locked up for years. Savers will not be able to sell if they need additional liquidity, which means, let's just say you have savings, you have a pension fund, a savings fund, and let's say you saved up until the day you retired, and inside your retirement savings fund, you have, for example, let's say £100,000 or $100,000 or $50,000 or so on. And let's say this scheme is going on where BlackRock is using your money to fund projects in your own city. And let's say now you need your money back from BlackRock. Is BlackRock going to give it back to you? No. And that's the downside, which means BlackRock will take your money, invest it into a community you couldn't care less about, and you'll never see your money again. Until, I'm guessing, when the contract runs out. And also, just to put in perspective, the retirement age for pension funds in the UK is about to be reaching 72 years old, which most people wouldn't reach. To that, essentially, it's just this liquidity could essentially be the heel of globalization 2.0. No sensible person would accept locking up their money for years in an increasingly uncertain world. That is why BlackRock is betting on automatic retirement enrollments for this natural, essentially, resistance. Moreover, if savings massively migrate towards these investments, bond yields would increase. This rise would essentially make bonds even more attractive as a savings instrument. Between investing in a speculative green energy startup and a 7% bond, most servers would choose the bond. Just to put in perspective, if an organization like BlackRock can't do that now, it will be a walk in the park for them later on in a CBDC world. In a CBDC world, BlackRock could easily pull this off, where everybody's money that's sitting in a bank ties into CBDCs. A click of a button, it could go into BlackRock's pocket to invest into your communities, and you won't even have a say about it. Because before you know it, you'll be in a digital prison. This is why I say it's so important to understand the benefits of cryptocurrencies, because we're so close to a digital prison that people just don't even realize it. Larry Fink recently also made a surprising statement about Bitcoin. He claims that if the United States does not control its own debt, America risks losing its reserve currency status to digital assets. This prediction comes in a particular context. By 2030. Mandatory spending and debt servicing will exhaust all US federal revenues. Thus, investors might start Bitcoin as a safer bet than the US dollars. And that is why, essentially, the United States is not very fond of moving forward on a Bitcoin reserve asset. Tokenization of assets is the other pillar of this transformation. Larry Fink explains that this technology will essentially give access to investments. However, BlackRock, who wants a new digital identity verification system to accompany this evolution. BlackRock wants to be behind. They want to be behind this digital identity world. BlackRock wants to create this digital identity world for people. BlackRock's strategy reveals the tensions of the current financial system. On one side, governments are massively indebted and can no longer finance infrastructure. On the other, tens of thousands of billions of dollars in savings lie dormant in essentially multiple bank accounts around the world. Thousands to hundreds of thousands to millions of bank accounts around the world, essentially just money sitting there in savings or inside the United States. As a decentralized and liquid asset digital currencies, they offer essential alternative to traditional systems. Stablecoins used to buy cryptocurrencies also backed by US government debt. Each stablecoin essentially purchased is therefore indirectly a purchase of a US debt. BlackRock's globalization 2.0 raises fundamental questions about the future of financial systems. While governments struggle to finance their needs, private asset managers are becoming key players. BlackRock's strategy essentially invites all citizens to consider how they want to invest their money, with private managers like BlackRock or cryptocurrencies. Honestly, this just tells you how close we are to a digital world. Genuinely tells you how close we are to a digital world, where essentially BlackRock is mentioning these things, where they're thinking about creating you a digital identity world, is what BlackRock is thinking about doing. Also, BlackRock is thinking about using your pension funds in the West to fund your own communities. I mean, one, nobody wants that. Two, nobody's going to trust BlackRock. And three, it's not my fault the government's messed up or if they run out of money. I mean, it also does it does show you that on the other aspect as well, that one thing I said a very long time ago as well, which was eventually liquidity is going to run dry. And that's when you see governments and banks and institutions start sprinting towards a digital world because of the liquidity inflow. Which also Ripple has mentioned multiple times that essentially they're going to open the floodgates. Ripple on Bloomberg has mentioned multiple times they're going to open up the floodgates of the amount of money that's trapped, and that the XRP ledger and Ripple's payment systems can make that happen. But it just, it honestly just tells you that the liquidity is drying up for governments, which is going to make governments, banks, and institutions start sprinting towards cryptocurrencies due to liquidity, which means they're also going to be sprinting towards regulations, because now it's time to regulate cryptocurrencies because the world is running dry. And they need your money to be able to fix your own communities. That one's just crazy to even think about. And BlackRock is trying to set it off as, this brilliant, heart-warming idea, invest in your own communities with your pension funds. No. Honestly, no. Not a single penny of mine should be going towards any community. It's not my job to fix communities. I vote for someone to run a country, and then I vote for people under him to make sure the communities are run well. The government gives it to those communities to run. It's not my fault if those people don't know how to use money properly inside the government. And when their liquidity goes dry, it's not time for me to give up my savings so they can start using it to build communities that I couldn't care less about. Honestly. Because the governments don't care about us. They really don't. So why should we care about them? Now, Ripple is what we're going to talk about next. Before we talk about Ripple, which is also very relatable to this digital world that we're heading towards, let's go inside the comment section first. Let's see where we're at. But I'm guessing everybody's on the same page. Nobody wants their savings to go inside of BlackRock. If I had to guess, everybody watching this live right now doesn't want a single penny of their pension money going towards BlackRock's refunding of communities program. And not only that, but you can't even use your own money because it's going to be trapped in building something you couldn't care less about inside the community. And some people have just been saving savings to move country. So why would they invest it back into their community? Some people are saving money to move to Dubai or Monaco or Italy or something. The last thing they want to do is spend money into a place where they want to leave. Now, his solution sounds like his own wet dream. I agree 100%. I don't trust anything Larry Fink says. He's evil. I agree. Hi, I have 20 ETH. Good time to sell or keep it. It's up to you. BlackRock invest buying up local real estate. Yep. I'm going to invest in my community, but it's called the CMF community. Let's go. That's the only community you should be investing into. No financial advice at all. We have credit unions in the UK, Miles. Yes, we do. Facts. No thanks, BlackRock. Facts. They will invest your savings also in free boosters for all the above. Yep, I agree. I think other countries will follow US law about customer privacy to speak with the human. I think sure. I think 100% they should do. I agree. BlackRock, more like blackmail. I agree. BlackRock just wants the control of everything, Miles. Facts. BlackRock wants I don't think BlackRock will ever go for XRP ETFs as it goes against their plans. Good job. My accounts are always overdrawn. Let's go, funky brother. Regarding essentially XRP ETFs, they will, because if BlackRock is trying to play the agenda for social credit systems, they need their CBDCs, and there's only one blockchain firm that offers CBDC services. Now, Ripple. Ripple confirms institutional XRP adoption as tokenization launches near. Ripple's president, Monica Long, has confirmed that institutional usage of XRP is increasing right now, opening the way for special occasions on August 1st with the official launch of Ripple's institutional tokenization campaign. The launch will essentially is expected to bring institutional assets on-chain via the XRP ledger, will likely serve as a motive for broader adoption of XRP in the financial infrastructure. The XRP ledger's institutional tokenization program is scheduled to go live on August 1st. The program is planned to allow institutions to tokenize real-world assets securely and efficiently. According to Ripple's representatives, this is a major move in bringing traditional finance onto the blockchain platform. Ripple's tokenization platform is going live on the 1st of this month coming. Ahead of the launch, the platform essentially is also launching, has emerged as a tool for the fast XRP Ledger token creation. It enables users, both institutional and retail, to issue XRP Ledger-based tokens in under 5 minutes using interconnected devices. Adding to essentially this sentiment, Ripple's recent acquisition of Hidden Road, a prime brokerage service, is also part of the broader institutional strategy. CEO Brad, in a conversation on the Crypto in 1 Minute series, describes such brokers as key to connecting institutions like hedge funds and trading desks to digital asset markets. Traditionally, these roles have been filled by large banks, but Ripple is now expanding in these roles of areas. San Francisco's headquartered enterprise blockchain firm Ripple has confirmed that the Nasdaq CEO will also be a keynote speaker in the upcoming Swell conference. Fredman, who has essentially been at the helium of the exchange since 2017, will explore the potential of digital assets, blockchain, tokenization, and other related topics. Ripple's Swell event is coming up. August 1st is also going to be the opening day of tokenization on the XRP ledger too. Big things are coming essentially for the XRP ledger. Big things are still going to be happening inside the crypto space. And based on news from today, it shows you how close we are really to a digital future. And if BlackRock wants to do essentially a social credit system world, well, they need a CBDC wallet attached to it, which is what was discussed at the World Economic Forum. Out of 50,000 different types of cryptocurrencies, only one company offers a CBDC platform, which is Ripple, and only one essentially blockchain has multiple awards for CBDCs, which is again the XRP Ledger and Ripple. So, I mean, if you want to be prepared in a CBDC world, XRP Ledger is pretty much where you have to be camping into. Remember, you will own nothing and be happy. Facts. What Michael said, absolutely facts, is what was mentioned in the World Economic Forum, and it's going to happen whether people like it or not. So prepare yourselves for this digital world that we're heading into, which is getting closer by the second. So you don't get left behind in a digital prison that BlackRock apparently is about to be creating for you. So, on that note, that XRP is your future and you should be looking into it as fast as possible, and that countries are running out of essentially liquidity and they're sprinting towards regulations right now, and BlackRock wants to create you a social credit system world. We have reached the endings of tonight's live. If you're watching this for the first time ever, this is called the CMF Live. It stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards, for the most recent news on cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And this was episode 345 of the CMF Live. Episode 346 is going to be tomorrow. So definitely tune in tomorrow. If you followed me during this live, if you subscribed to me during this live, thank you so much and welcome to the CMF. If you liked and retweeted this live, thank you so much as well. CMF members, if you haven't liked or retweeted this live, please like and please retweet this live. If you're watching this on YouTube, just drop a like and drop a comment outside the live. Also, I will see everybody tomorrow, same timing as usual. Obviously, before we do go, let's start the comment section first. Night Mouse, Pablo, see you tomorrow, same time as usual. Good night, Mouse, and all CMF. Thank you for a great live and all the news. Let's go, JP. See you tomorrow, same time as usual. Good night, Miles and CMF family. Funky brother, see you tomorrow, same time as usual as well. Thank you, Miles. Good night and see you tomorrow. See you tomorrow, Mike. Same time as usual. Good night, Miles and family. Great live. Many thanks. See you tomorrow. Ian, see you tomorrow. Same time as usual as well. Good night, family. Thanks, Miles. See you tomorrow. Orphan, see you tomorrow. Same time as usual. D, thanks, Miles. Have a good night. Let's go, D. See you tomorrow. Same time as usual as well. I will be seeing everybody tomorrow. Same timing as usual. 10 p.m. London time onwards. For the next episode of CMF Live, episode 346 tomorrow. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world, CMF. Love you all. See you tomorrow, same time as usual. Thank you, Miles. Good night all. Let's go, Stormy. See you tomorrow, same time as usual as well. See everybody tomorrow, same time as usual. Like, comment, retweet, share, subscribe, follow if you already haven't. See you tomorrow, same time as usual.